Tuesday, May 12th, 2026, Crypto Portfolio Master Breakdown. Like and subscribe, The $1 Investor. Remember, I'm not your financial advisor. I'm just a blue-collar working bus driver who found the formula to getting wealthy $1 at a time. I can only offer you a drink of water. It's up to you to know if you're thirsty enough for it. Crypto is different from stocks. These are not companies. They do not have earnings. They do not have dividends. They do not have balance sheets like Apple, Microsoft, Google, or Intel. Crypto is mostly narrative, adoption, liquidity, speculation, regulation, and belief. That is why I treat it differently. At one point, I was buying 9 coins. After doing more research, I cut that down. Now I only recurring buy 3: Bitcoin, Ethereum, XRP, $1 each, 7 days a week. Bitcoin and Ethereum are the only two I truly believe have the highest chance of surviving the crypto bubble long term. XRP is different. I do not love it the same way. I own it because the hype, the community, the regulation story, and the payment narrative could eventually create a sellable opportunity. That is not marriage. That is a trade with a long leash. According to my screenshot, my total crypto portfolio is sitting at $922.09, up $859 or 1,371.90% all time. My holdings are Bitcoin 0.0037765 BTC, worth $309.92, up 877.35%. Ethereum 0.089502 ETH, worth $212.79, up 575.15%. XRP 113.57 XRP, worth $167.70, up 2,871.35%. Kronos 1,375.75 CRO, worth $104.10, up 97.20%. Hedera 656.19 HBAR, worth $64.61, down 28.97%, and I also have $63.36 sitting in US dollars. Bitcoin is the king. It is the original. It is the one Wall Street finally accepted first. The big change over the last 2 years was institutional adoption. Spot Bitcoin ETFs launched in the United States in 2024, and firms like BlackRock helped turn Bitcoin from internet money into something Wall Street could package, hold, trade, and allocate inside traditional portfolios. ARK says Bitcoin continued integrating into the global financial system through spot ETF growth, index inclusion of digital asset companies, and clearer regulation. Bitcoin's next 5 years depend on 3 things: institutional adoption, regulation, and whether people continue treating it like digital gold. The bullish case is simple. More institutions buy, ETF demand keeps growing, supply stays limited, and Bitcoin becomes a permanent alternative asset. The bearish case is also real. Regulation gets ugly, liquidity dries up, risk assets crash, or people stop treating Bitcoin like a store of value. Citigroup recently cut its 12-month Bitcoin target to $112,000, but still gave a bullish scenario of $165,000 and a bearish scenario of $58,000. That shows exactly how Wall Street sees Bitcoin: serious upside, serious downside, and very high volatility. Ethereum is the second real survivor in my mind. Bitcoin is digital scarcity. Ethereum is digital infrastructure. Ethereum powers smart contracts, decentralized finance, tokenization, stablecoins, and a lot of blockchain development. That does not mean Ethereum is safe. It is not. But it has utility. It has developers. It has an ecosystem, and that makes it different from most coins. Ethereum has had a rough stretch recently. CoinGecko noted that Ethereum entered mid-2026 around $2,100 to $2,250, down sharply from its August 2025 high, near $4,954. But Wall Street still sees potential. Citi's lowered 12-month Ethereum target was $3,175, with a bullish case of $4,488 and a bearish case of $1,198. Standard Chartered previously lifted its Ether forecast to $7,500 by the end of 2025 and projected $25,000 by the end of 2028, based on stablecoin growth, staking, and Ethereum's role in traditional finance. So Ethereum's next 5 years come down to this: does the world actually build on Ethereum? If stablecoins, tokenized assets, staking, and decentralized finance keep growing, Ethereum survives and grows. If cheaper chains steal the activity, Ethereum struggles. XRP. XRP is the hype coin in my portfolio. I'm not going to pretend different. XRP has one of the loudest communities in crypto. Some people think it will replace global banking settlement. Some people think it is overhyped. I am closer to the second camp, but I still hold it because hype can move markets. The XRP story is built around Ripple, cross-border payments, banking adoption, and regulation. Its biggest problem has always been uncertainty. Its biggest strength is that the community refuses to die. Some forecasts say XRP could push higher if crypto legislation, ETF flows, or banking adoption improves, but projections are all over the place. One recent analysis said XRP could move toward $5 to $10 under an optimistic regulatory and ETF inflow scenario, while delays could keep it much lower. Another outlook said XRP reaching $5 by the end of the decade depends heavily on real-world adoption and regulatory progress. So my opinion is simple. XRP is not my religion. It is a position. If the hype pays, I sell Kronos. Kronos is tied to the Crypto.com ecosystem. That gives it some utility, but it is still a riskier altcoin. CRO has not proven itself like Bitcoin or Ethereum. Some forecasts say CRO stabilized mostly between 8 cents and 18 cents during 2024 and 2025, showing consolidation instead of explosive growth. That fits how I view it. I am not adding daily anymore. I am just holding. If it runs, good. If it dies, that is why I stopped feeding it. Hedera. Hedera is another altcoin I am holding but not feeding. It has technology, it has enterprise partnerships, it has supporters, but price action has not proven enough for me. In my screenshot, Hedera is the only one down, sitting at negative 28.97%. That tells the truth. Not every coin wins, not every story becomes real. That is why I cut down to only 3 recurring buys. 20-year dollar cost averaging math. If I buy $1 per day into Bitcoin, Ethereum, and XRP 7 days a week, that is $3 per day. That is $21 per week. That is about $1,092 per year. Over 20 years, that is $21,840 invested. No dividends, no guaranteed compounding, no earnings. Crypto does not work like dividend stocks. The only return comes from price appreciation, staking in some cases, or selling higher later. If Bitcoin and Ethereum survive, that small daily habit could become powerful. If the crypto bubble collapses, most altcoins can go to zero. That is why I do not treat crypto like my foundation. My foundation is still my retirement account, my ETFs, and my great companies. Crypto is my speculative corner. Controlled, small, automatic, no emotional all-in. Today I want to talk about something different. Not stocks, not ETFs, not company breakdowns. Today I want to talk about my crypto portfolio, and I need to be honest from the beginning. I do not look at crypto the same way I look at Apple. I do not look at crypto the same way I look at Microsoft. I do not look at crypto the same way I look at Google. Crypto is different. Crypto is not a company. Crypto does not produce earnings. Crypto does not pay me dividends. Crypto does not send me a balance sheet the same way a real business does. Crypto is belief. Crypto is liquidity. Crypto is adoption. Crypto is speculation. Crypto is regulation. Crypto is hype. And sometimes crypto is straight garbage wrapped in a beautiful story. That is why I had to change my system. At one point, I was buying 9 different coins. Then I did more research. And the more I learned, the more I realized something. Most of this crypto world is nonsense. Most of it is not investment. Most of it is gambling. Most of it is pyramid energy. Most of it is people trying to sell the next person a dream before the whole thing collapses. That is just my opinion, so I cut it down. Now I only recurring buy 3 coins. Bitcoin, Ethereum, XRP, $1 each, 7 days a week. Bitcoin and Ethereum are the only 2 I believe have the strongest chance of surviving the crypto bubble long term. Bitcoin is the king. Ethereum is the infrastructure. Everything else is a lot more questionable to me. Now XRP is different. I do not own XRP because I am in love with it. I own XRP because the hype behind it is ridiculous. The fanboys are loud. The community is strong. The Ripple story has been around forever, and sometimes hype can become profit. So if XRP ever gets that crazy run, I will be there, and I will sell the shit out of it for profit. I am not married to it. I am positioned. According to my screenshot, my crypto portfolio is sitting at $922.09. I am up $859 all time. That is 1,371.90%. Now let me break down what I own. I own 0.0037765 Bitcoin. That is worth $309.92. That position is up 877.35%. I own 0.089502 Ethereum. That is worth $212.79. That position is up 575.15%. I own 113.57 XRP. That is worth $167.70. That position is up 2,871.35%. I own 1,375.75 Kronos. That is worth $104.10. That position is up 97.20%. And I own 656.19 Hedera. That is worth $64.61. That position is down 28.97%. I also have $63.36 sitting in US dollars. Now let me tell you my crypto story. Back in 2018, a friend and I bought Dogecoin for the hell of it. I bought it at 0.0066 cents per coin. I put in $109. I ended up with about 15,500 coins. At the time, it felt like a joke. Then the coin started catching fire. Then Elon Musk started pumping it. Then Dogecoin went crazy. It eventually hit around 79 cents. I got out around 66 cents because that was my stop loss level, and I walked away with over $10,000. That was my first real crypto lesson. Not because Dogecoin was great, it was not, but because hype can make garbage move. And if you understand that, you understand a huge part of crypto. Now here's the other crypto story that still bothers me. Back in 2011, I had $10,000 ready to put to work. I called my broker. I told him I wanted to buy Facebook. Facebook was around $19.50. He told me it was speculative. So I asked about Microsoft. He called that old tech. Then I asked about Bitcoin. Bitcoin was under $2. People were going crazy over it. I did not understand it. He did not understand it either. He told me it was speculative and probably a pyramid scheme. So instead, he put me into Kinder Morgan, a pipeline company, and the rest is history. If I had bought Bitcoin with $10,000 back then, I would be a multimillionaire today. If I had bought Facebook at $19.50, I would also be sitting pretty. But here's the honest truth. Who knows if I would have held it? Back then, I did not have the mindset I have now. I might have sold too early. I might have panicked. I might have taken a small profit and walked away. That is why mindset matters more than opportunity, because opportunity without patience is just another missed blessing. That is why today I do things differently. I do not go all in. I do not chase everything. I do not believe every crypto story. I buy small. I buy consistently, and I limit my recurring purchases to what I believe has the best chance. Bitcoin, Ethereum, XRP, $1 each, every day, 7 days a week. That is $3 a day, $21 per week, about $1,092 per year. Over 20 years, that is about $21,840 invested. Now remember, crypto does not pay dividends like Apple or Intel used to. Crypto does not give me earnings. Crypto does not guarantee anything. This is speculation, but it is controlled speculation. That is the key. Bitcoin is the one Wall Street finally accepted first. The launch and growth of spot Bitcoin ETFs helped move Bitcoin from the outside of the financial system closer to institutional portfolios. That matters, because when Wall Street starts building products around something, the game changes. Bitcoin's bullish case is simple. Limited supply, more institutions, more ETF demand, more people treating it like digital gold. The bearish case is also simple. Regulation, crashes, liquidity drying up, risk assets getting destroyed. Bitcoin is not safe, but it has survived everything so far. Ethereum is different. Ethereum is not just digital scarcity. Ethereum is digital infrastructure. Smart contracts, stablecoins, tokenization, decentralized finance, developer activity. That is why I still buy Ethereum. If the future of finance moves on-chain, Ethereum has a real shot at being part of that infrastructure. But Ethereum has risks too. Fees, competition, other chains, weak activity, regulation, and price volatility. Then there is XRP. XRP is the wild card. The story is cross-border payments, Ripple, banks, settlement, regulation. But for me, the real reason I hold XRP is because the community is relentless. The hype refuses to die. If that thing runs, I want to be there, but I will not confuse hype with faith. If I get my profit, I am taking it. Kronos and Hedera are different. I am holding them. I am not feeding them. Kronos is tied to Crypto.com. Hedera has its own technology and enterprise story, but neither one has earned my daily dollar anymore. That is the difference. I am not emotionally attached. I am not here to worship coins. I am here to make money, and I am here to protect my time and my capital. So my bottom line is simple. Crypto is not my foundation. Crypto is my speculative corner. My foundation is still my retirement account, my 457B, my ETFs, my companies, my income, my pensions, my discipline. Crypto is the side bet, a controlled side bet. And if Bitcoin and Ethereum survive the next 20 years, these $1 daily purchases could become something serious. If they do not, I did not bet the farm. That is discipline. That is position sizing. That is how I play this game now. Not like the young version of me, not like the guy who missed Bitcoin under $2, not like the guy who sold great companies too early. This version of me understands something. I do not need to catch everything. I need to build systems. And this is one more system, $1 at a time, 7 days a week, for the next 20 years. Like and subscribe, The $1 Investor. Remember, I'm not a or your financial advisor. I'm just a blue-collar working bus driver who found the formula to getting wealthy $1 at a time. I can only offer you a drink of water. It's up to you to know if you're thirsty enough for it.